Hey everybody, Alex and Rocky here from Zephyr Equity Group. Today we have some exciting topics for everyone. Rocky, let's go rapid fire on this. Let's roll.
All right. Yep, Alex. So, today we're going to be basically discussing. There's a lot of questions that our viewers are asking, and these are the top ones. So, the first one that I have for you is, what are the best multifamily homes to invest in?
The best multifamily homes to invest in, we have to always look at the metrics. It's all about the numbers but the big thing is location. You want to make sure that you are going to places that have, well, growth in population, growth in jobs, right? People like nice weather, so that helps too. Okay. But also good schools. You're not looking at war zones, right? So ultimately, we have to look at what's the developing factors of that area. What's causing people to come in. A lot of times it's not just the population, but it's the jobs that are available that's getting people to be there. So those are some key things. But then in every location, like every city, there's also something called submarkets where you're looking at the market itself. Like, for example, within, say, the city of Houston, right? From looking at the city of Houston, if you look on the map, well, there's also other suburbs outside of Houston that we have to pay attention to make sure that we're looking at the specific pockets as well. So you can't just say, oh, Houston's grown, let's just buy in Houston. Well, are you in the war zone of Houston or are you in the nice parts of Houston?
All right. Okay. And so those are like the external factors, right? What about evaluating the internal factors of the multifamily home?
Well, that's a whole due diligence. You got to walk through, you got to make sure you bring the contractor or someone who really knows what the place looks like, or should look like on the inside, and what's the roof looking like. You got to climb onto the roof, check out the roof, check out all the spouts, the drainage, make sure those are good, right? I would say you got to, it'll be good to go to a complex, the best after a rainy day, because you really get to see where the problems are. Is water settling in one area versus the other? Are there flood problems? Are there plumbing issues, electrical issues, right? How dated is the plumbing and electrical? Does it need to be reworked? Do you have to open up any walls, right? What's the plan? You have the blueprint for it, or you got to start opening walls, right? How's the foundation? Sometimes the foundation itself can make or break the deal because of the angle that the foundation is at. You see, so there's so many factors that go into that.
Yeah, so it really requires for you to, go through the or do the due diligence,
Oh,
right?
that's
So,
huge.
right. And another thing is there are multi-family homes that are low cost, right?
Hmm.
Is it worth investing in?
Well, it really depends. If the low cost ones, you need a lot more experience on the low cost multifamily homes because they're usually older, right? They have older plumbing, older electrical, older roofs, windows are older. They might not have like a central air system,
Yeah.
right? So you have to go in expecting that, and you have to go in knowing what to look for. See, in real estate, there's something called a CapEx, capital expenditure. Capital expenditure is not just replacing your regular, air conditionings or refrigerators, appliances. You're not replacing those. Capital expenditure is plumbing or the roofs, right? It is the big ticket items. So going in, we always say you never want to get caught at a capital X, which is what we call a Cap X tsunami. What is a Cap X tsunami? It is when you go into an apartment and because of how old and how not well kept it's been, all of a sudden you accumulate this huge cost. It's like a tsunami coming at you,
Yeah.
right? So you end up with a whole bunch of costs that you didn't understand or didn't realize it was there. And now your investors are not getting their income. See, that's something we all have to pay attention to.
Right. So again, it's going to boil down to due diligence.
Yeah, due diligence.
Right. Okay. Um, what are the when do you know if it's a good time to invest in multifamily properties?
Well, it could be personally, when do you know if it's a good time versus the market. I think when you talk about the market, there's always a good time because the multifamily is purchased upon the pro forma of the property. It's based on, are you buying it correctly? Are you financing it correctly? Right? And are you managing it correctly? So if you're really hitting all three, like right now when interest rates are high, the underwriting, you have to underwrite with a higher interest rate than when interest rate was at 3%. Now it's between 5 to 6%. You have to underwrite for that. So as long as the numbers make sense, then you're good to go. And why is it that homeowners have to drop their prices right now? It's because someone buys $1 million home at 3% versus someone buying a $1 million home at 5%. I mean, their payment dramatically increases every month. So now that, seller has to lower their home to maybe say 900,000 or 850,000 so that it becomes still affordable. So as a multifamily investor, we have to look at that. If someone's trying to sell their apartment for $10 million, well, right now, maybe back then it makes sense, but now it doesn't anymore because it won't make sense to finance it at, say, the percentage that it is and still have it cash flow and be it profitable. So that is the difference nowadays.
Right. Okay. And what is the key principle in multifamily investments?
Well, there's the three pillars that we talk about through our education is making sure you buy it right, which means that you're underwriting, the due diligence, right? The location, everything matters. Then you got to finance it correctly. Your loan terms. Are you using a short-term loan, a bridge loan, agency debt? What's the interest rate? What are the terms, right? And then the third key is managing it right. You have to make sure you have a great team. Once you bought it and financed it, right? The most important part now is now you got to run it. You got to run
Right.
it correctly. You can't just, it's like having a child, right? Finding a partner, having a child, that's two. Now you got to manage that kid, right? A
Right.
lot of it has to do with managing that kid correctly. And it's the same thing with multifamily, right? You find the right people, you find it, now you buy it, and now you got to manage it.
Right. Okay. It's like really having a baby, right?
Yeah,
So
it's a baby. You got to treat it like a baby.
all right. And these last two questions, Alex, are, somehow related. And I think one of the things that a lot or a person who's looking to invest is asking, right?
Mhm.
So the first one is, how do you retire by investing in multifamily real estate as a passive investor or a limited partner?
Well, as a limited partner, you have to look at what are the returns, and then you have to calculate based on the returns what your monthly expenses are or yearly expenses are. Then you have to look at, well, how much do I have to invest in order to get that return, right? So it's something where we talk about all the time and the calculations are done. But that's why multifamily, where you refinance and then you roll it into the next deal, is so important, is because when you refinance the money out, because the money has grown, well, every time you roll it into the next deal, you're getting more and more passive income. See, so it's a key thing. I just, inside my business, at the medical office, we just had a chat about, money and finances and how it works, right? We talked about the difference between stocks, difference between real estate, all the different things. You put it together, and which one comes up on top. I believe most of the time real estate comes up on top. And that's why the top firms, even the stock companies themselves, the brokerages themselves all own a lot of real estate.
Right.
I always think this way,
Yes.
Rocky. I think of it this way. People ask me which one's safer. And I said, well, why don't we ask the banks? And they're like, what do you mean? I said, the bank will loan you money, right? They will loan you 70% of the money to 80% of the money, sometimes even 95% of the money to go buy a property, single family home, multifamily home. They'll loan you that money.
Yeah.
The bank will not ever loan you money to go buy their own stocks.
Right.
They don't even believe in it,
Mm-hmm.
right? So if
Mm-hmm.
they can't
Right.
even back it themselves on their own stocks, what about you?
Why would
Why
you?
would you? Right?
Right.
They want you to buy it, but they're not going to loan you money to go buy it because they're afraid you're going to lose your money.
Yes. And just like what they said, real estate is a hard asset. No matter what happens to the market, you can see it's there. So
Right.
it's a really great investment. Now, this is the biggest question. How do you create wealth when it comes to investing in multifamily homes?
I think it's wealth is, you have to define what wealth is, right? For
Mm-hmm.
me, wealth is something that you can pass on from one generation to the next.
Yeah.
And right
Mm-hmm.
now, I'm teaching my
Right.
daughter about real estate as well. She's watching us go to seminars. She's coming to some of the seminars with us. So she's able to absorb all of this, and see the whole environment and what we actually
Mm-hmm.
do. So when you look at that, is as she gets more interested in that, she has the knowledge, and hopefully we're able to invest enough in real estate where we can pass some on to her, right? And then
Mm-hmm.
she learns about how to manage and everything on there. I think that's how we create generational wealth. Robert
Mm-hmm.
Kiyosaki talks about wealth as the moment you become wealthy is when your passive income can exceed your expenses. Then you truly have freedom, right? That's
Mm-hmm.
one definition of wealth as well. So it really depends how you define wealth.
Right. And I think the first thing is really to learn what you are investing in
Yeah.
first so that they can be successful,
Well, you got
right?
to have the education first.
Okay.
I agree.
Right. Right. Okay. All right. Well, thank you very much, Alex, for answering these questions for us and for our viewers. Most of the questions that we have here were discussed in our previous episode. So if you haven't watched it yet, please do so and please like and subscribe to our
Yes.
channel.
Please like and subscribe. Thank you, Rocky.
Thank you, Alex. Bye
Bye.
now.